Hello everyone and welcome back to Brijesh Kapoor Finance. Today is Monday, June 2nd, 2025, and in just 2 days, Bank of Canada will announce one of its most anticipated interest rate decisions of this year. That's right, June 4th could shape the next 6 months of our mortgages, investments, and savings, and maybe even our job market. So, in today's video, I'm going to break down what's happening in the economy, what the experts are predicting, and most importantly, what this decision means for you. Stick around, this one's crucial. Let's start with the big picture. Right now, the Bank of Canada's overnight rate is sitting at 2.75%. After aggressively cutting rates by 225 basis points over the last year to fight off recession fears, the Bank of Canada paused its easing cycle back in April. And now the big question is, will they resume cutting on June 4th or are they going to hold it steady? Now, to answer that, we need to look at what's happening in the Canadian economy right now. In Q1 of 2025, Canada's economy actually grew faster than expected, up 2.2% annualized. Now, that was largely due to a big spike in exports, likely driven by businesses trying to get ahead of possible US tariffs. But, and this is the key, domestic demand was soft. Canadians are still spending less, and inflation hasn't quite cooled to call it mission accomplished. On the jobs front, unemployment went up to 6.9% in April, and that's the highest we have ever seen since 2022. Now, that's telling us that the labor market is actually slowing down, which normally would support another rate cut. But here's the catch. Inflation is still sticky. Core inflation is sitting close to the top of bank's target range, which is around 3%. So, if bank cuts too aggressively, it would risk fueling another wave of rising prices, and that's something which they desperately want to avoid. Now, let's talk predictions. A recent Reuters poll of economists shows that most experts now expect Bank of Canada to hold rates steady on June 4th. Now, that's a change from earlier this year when many were expecting another cut by summer. But stronger than expected GDP numbers have actually shifted the mood. At the same time, the market isn't ruling out more cuts later this year. Many analysts still believe you'll see at least 2 more 25 basis point cuts before December, which would bring the policy rate closer to 2.25%. So, with that in mind, what does this rate decision mean for you? If you are a mortgage holder with a variable rate, a rate hold means your monthly payments stay the same, at least for now. But if rate cuts do return later this year, you could see some relief. Now, if you're looking to renew, keep a close eye on rate trends. Locking in for too long right now might not be ideal. Now, if you're an investor, a steady rate is generally good news in the short term. It gives equity markets some breathing room and predictability. But remember, future rate cuts or a surprise hike can swing markets quickly. Stay diversified and keep your eye on economic indicators. And if you're a saver, this could be your window to lock in decent returns on GICs or high interest saving accounts. If the bank cuts rates again later this year, the interest rates which you are getting right now might drop. So don't sleep on the current offers. Big picture, the June 4th rate decision is unlikely to bring any fireworks, but it will set the tone for rest of this year. Whether Bank of Canada chooses to pause or cut, the decision will signal how they see inflation, growth, and financial stability balancing out in the coming months. And as always, your best move is to stay informed and prepare your financial plan accordingly. That's it for today's breakdown. I'll be back with a follow-up once the rate decision is officially announced. If you found this video helpful, please hit that like button, subscribe, and share this video with someone you know. Thank you for watching. I'm Brijesh Kapoor, and I'll see you in the next one.